Bitcoin is bouncing this morning right after Trump came out and said at 7 a.m. that they are making very good and productive conversations with Iran, and he wants to delay strikes for the next 5 days. However, the Iranian side came out and debunked this, and they said that they haven't been talking. So what's really going on? We'll dive into all the news today. Just last Friday, before the market closed, Trump gave a 48-hour ultimatum. Either Iran reopens the Strait of Hormuz or the US will hit and obliterate Iranian power plants. So just a lot more swings in the narrative over the last 72 hours. As at first, it was a full-on escalation, but now today, apparently, it could be a de-escalation, but not confirmed. So with this news, you can expect what happened. Oil prices dropped a bit, although it's still above $100 per barrel. S&P rebounded a little bit. Gold continued to fall because people are now going risk on again. And then with that, Bitcoin bounced a bit. So we'll cover all the charts, especially Bitcoin, and what are the key levels to watch on Bitcoin at the moment in order for this bounce to continue. And there are some interesting developments in the crypto world as well. So there is a new development with the Clarity Act with two main blockers that are both potentially getting resolved quite soon, the stablecoin yield portion and the tokenization portion. So we'll cover those and the specific timeline that you need to watch. There is actually a main markup that could happen this Wednesday. So I'll get into that. And Elon Musk and XAI and all his companies, Tesla, SpaceX, they have announced something very big over the weekend called Terafab. We will get into that also because I think this is going to be one of the biggest developments in the AI space that can carry over to our crypto world as well. What else is here? And I also want to warn you guys with some historic precedent as to this oil crisis. Even if the war ends today, oil prices could come down a bit, but it doesn't mean inflation will come down right away. So that's a big distinction. The market shock is still going to be felt no matter what for at least a couple months, and I'll show you exactly why. Okay, that's on the agenda today. Welcome everyone to the live stream. If you have any questions or comments, leave them down in the chat and we will answer all of them, at least what I can, in the Q&A session at the end. All right, let's get right into it. Nice. So first things first, where are we on the oil situation? I need to move my monitors here. Forgot to move my monitors. Okay. So here are the live updates. So last weekend, I want to say it's Friday night, but it could be Saturday morning as well. Trump threatened for there to be a 48-hour ultimatum. This was on exactly what date? It doesn't even say. 48-hour ultimatum to reopen the Strait of Hormuz, otherwise they are going to escalate. Just this morning at 7 a.m., Trump told CNN that there are 15 points of agreement that they have reached between US and Iran, and he announced that they will hold off strikes for 5 days. However, Iran has responded. Their foreign ministry came out and said that there was no dialogue between Tehran and Washington. So what's going on? Which side do you believe? I don't really know, and I don't think that really matters. It does show that Trump is more worried about the market impact of this and the wider impact of this than Iran side. That's exactly what it says here. What is the truth? Whether they talked or not doesn't really matter. They can talk and then both sides can, say something else, or they can agree or they can disagree. But clearly Trump wants to calm the markets, calm the overall fear, overall effects, but Iran doesn't care. Now, uh, what to watch this week? So the narrative is just one side. Even if we get a confirmation of, oh, they're talking, what are they going to be talking about? Are they going to end the war? There are still so many steps. And really the thing that matter to us is oil prices. And oil prices are still pretty high. If the war has already ended, oil prices would be way lower to pre-war levels. But we are now just at $100 right before we came on live. So some people agree, some people believe it could be ending, some people don't. But still, it's already doing better than last week. Now, the one main event to watch immediately is this one right here. So the G7 countries will have a meeting in Paris from between Tuesday and Wednesday, and they will specifically discuss the Iran war and how they want to approach reopening the Strait of Hormuz, diplomatic efforts related to the war with Iran. And this is big to watch because they have already done what they can to help the oil prices. Remember, this is the oil conflict. Both Trump from Washington and the G7 countries behind the IEA have both released emergency oil reserves. So here is the timeline. First, it was the IEA, the International Energy Agency, have unanimously agreed to help Trump in their effort and released $400 million barrels of oil from emergency reserves. And on that same day, the US and Trump released 172 million barrels of oil from their strategic reserve. But even with all this, we know what happened. Oil price continued to shoot up because really it looks like it's not the supply issue, it's the narrative issue. And that's why Trump had to do this whole announcement saying that he's willing to pause the attacks and willing to negotiate. So that's why the truth here, what really happened, doesn't really matter, because when you look at why the futures market of oil prices reacted this morning, it's not because of this emergency oil reserve release or anything. It's not even confirmed to be real, the actual de-escalation. It's just the announcement. So the market is pricing in this event based on the news. Now, this war and specifically this oil crisis is big. We cannot overstate it. Here's what the IEA said. So this world in energy crisis is worse than 1970s oil shocks combined. So the 1973 and 1979 two shocks. And this is after, this is directly coming from the IEA executive director. So in total, 44 energy assets across 9 nations have been severely damaged since February 28th. And we also have seen countries that in the Middle East region, around the Persian Gulf, that cannot store more oil that they have produced. They had to shut down their oil production, such as Iraq, who has already shut down their production from March 6th. And more countries could be forced to shut down production soon. Now, this not only is a short-term effect, but it will also be a long-term effect. So this is important to understand because this is the way I wanted to teach myself in order to gauge these news headlines properly. So there are two main impacts that these can have on the markets. So first of all, whenever Trump says something of an escalation, okay, obviously the market is going to react negatively because oh my God, we have more war. But then if he says something positive, like this morning, like, oh, we are going to pause strikes for 5 days, the market reacts positively. So that's immediate short term. But that's a narrative reaction. There is also the long-term reaction that comes from the real shortage in oil supply and the downstream effect of rising gas price and rising inflation. Now, some people read these news and they'll say, hey, if the war ends or the war ends this week, inflation is no more. That's not true. Okay? Even if the war ends this Friday, within this 5-day pause period, oil, gas, and inflation, they won't recover fast. Oil futures will drop the fastest because it's a futures contract. Okay? It reacts based on traders' buys and sells. But the actual inflationary pressures on gas price and consumer goods and all the CPI, core PCE number prints, they will last for multiple months. There is a really good segment that I recommend you guys to watch coming last week from Bloomberg Podcast. This is titled, Oil Will Take 6 Months Minimum to Snap Back After the War, says Elon. So long story short, I'll give you the summary here. Even if oil price per barrel, crude oil price per barrel comes down to, basically where we are at now with a full de-escalation, the Strait of Hormuz is opened. What happens is gas prices, they soar like a rocket, but they descend like a feather. This is a very common saying. You can look this up on Google from previous oil crises. Most gas price and gas market analysts expect retail gas prices to peak sometime in April. And even if oil prices stabilize now, the wholesale price that comes from the war, they will keep going up, and they haven't even reached the retail yet. So even if oil price, let's say, stays at $100 per barrel now, our gas prices will still increase. That's what the gas experts are saying. This is from my research. Now, with historic timelines from previous oil crises from 1973, 79, and the most recent is from the Russia-Ukraine situation from 2022. So here's what happened. During the Russia-Ukraine conflict, the timeline was the invasion started on February 24th, 2022, but inflation did not peak until June 2022. In that middle was when oil prices already started to fall in June, but inflation continued to stay high through October, and gas prices continued to stay high from June until October. This is although crude oil prices already started to fall in June. So it took about an extra 4 months lag on the way up. So that's the main warning you have to keep in your head. If we have a repeat of escalation, de-escalation, at least in the gas and oil situation, like in the Russia-Ukraine conflict, then even if oil prices stabilizes today and it doesn't head higher, we are still going to have 4 months to go before all the pressure on gas prices will be felt through all the inflation prints. So this is bad. Why? Because, well, there's nothing Trump can do of an announcement that can change that. Okay, he can say, oh, we surrender or whatever, or like the war is over, or we beat Iran, or the Strait of Hormuz is open, whatever. But doesn't matter what he changes in the short term. The inflation will come. The bad CPI and core PCE prints will come, which leads to what? It leads to lower chances of rate cuts, which we already have seen over last week. So when I covered the dot plot and the Fed decision tracking for this FOMC meeting that just happened, most people are pricing in much lower chances of a rate cut in June. Only about 30, less than 30, 29% chance of a rate cut. No, even less. What is this? 16% chance of a rate cut in total in June. And most people only believe there to be one rate cut by the end of the year. And this came from basically the war pressure on inflation. This will not change no matter what Trump says, no matter what the next developments are for the war, for oil prices. We're not going to get this reversed unless something else happens. Okay, unless Trump pressures Jerome Powell, Trump pressures Kevin Warsh, or whoever the new Fed chair is. But just on the Iran de-escalation alone, it will not change the trajectory of the next few months of CPI and PCE number prints. If I can show you somewhere here. It's not on this stream. And it will not change the trajectory of the Fed. So that's why you have to be careful. In the short term, yes, if the war ends, people are going to be happy. The market is going to have a relief rally. But in the long term, from now over the next 4 months, we will have bad inflation pressure. So keep that in mind. Okay. Next, let's get into the markets. Let's get into price action. We have to start from the S&P. So the S&P, the most important level, it held. That's the 200-day simple moving average. You see, we quickly wicked below it, but market bounced right after this weekend. So this is probably part of the trigger of Trump as well. Trump doesn't want the S&P to fall below the key level. This is the key level. And usually when if closes below the 200-day simple moving average, it stays below for at least a week and it goes down 10% below. And if it doesn't recover within the same week, it gets very bad. So this is the first good thing. So now that oil prices are stabilizing right now at 99, you have gold dropping. Okay, so gold just continued to drop over the last 4 days. This is because people are pivoting away from risk off, from anti-war, uncertainty asset into risk. So this is why the S&P is doing okay, but gold is not bouncing from this. Interesting enough, Bitcoin. Is Bitcoin behaving more like gold or behaving more like risk like the S&P? Well, it's somewhere in the middle. So people keep wanting Bitcoin to behave just like gold. But the thing is, when war de-escalates, gold drops. Just like when there is war, gold holds up. So Bitcoin is bouncing, and this is actually good. So I think this speaks the fundamental mispricing of Bitcoin at the moment. So first, let's cover that. We looked at the mispricing in ratio between Bitcoin and gold before. I'm going to show you on the channel right now. So that's on this. Which one is the gold one? Bitcoin catches up to gold. This one. So the gist of this video was that all Bitcoin needs to do is to get back to its average level in ratio compared to gold, and we are already back in the bull run. And we're seeing that. So no, you can say, oh, Bitcoin is more like the S&P, Bitcoin is more like gold, but really it's neither. It's not exactly like those two. And for the people who like to compare Bitcoin to gold, well, if you think they're similar and their fundamental value is similar, at least in anti-debasement, then the ratio of Bitcoin to gold is really what you care about. And look at this ratio right now. It's bouncing, and it's bouncing hard. From the bottom, okay, Bitcoin has outperformed gold by how much? 27% now over the last 4 weeks. Why is that? Well, is gold a bad investment in these last 4 weeks when there is war? No. Gold is a good investment in these periods. But why did Bitcoin outperform gold? It's because Bitcoin is cheap. It's not because Bitcoin is a better store value than gold. It's more stable. No, not really. The only identifiable thing here is that, well, Bitcoin used to be so much higher in its ratio compared to gold. Throughout all this period from uh, January 2023 until August 2025, these, how many months is this? Like 30 months. 32 months of time is when everyone said Bitcoin is similar to gold. You buy gold, you buy a little bit of Bitcoin with it. Well, during this period, like if people were willing to buy gold up here, why would you? If people are willing to buy a bit of Bitcoin from their gold stash up here, why wouldn't you buy down here? It makes no sense. Makes no sense. And I even went into this a little bit in depth on this video here, looking at Ray Dalio's average entry. So Ray Dalio's average entry in the Bitcoin to gold ratio is up here, is around 20. Right now, that ratio is at 16. So Bitcoin is severely undervalued compared to gold. I think that's the only data-backed takeaway you can have. It doesn't mean Bitcoin is going to always outperform gold in war, but it doesn't mean gold is always going to outperform Bitcoin either. It just means the two have a rough range. And when Bitcoin is cheaper, you buy more Bitcoin. When gold is cheaper, you buy more gold. That's it. So I think that's the easiest thing to look at it. Bitcoin is still cheap compared to gold, even if you mainly want to buy gold, which I think it is a good spot. This is one of the only corrections on gold we've had over the last 3 years. It is a good spot. But at the same time, if you are considering buying gold here, you got to buy some Bitcoin. I mean, Bitcoin is just way, way cheaper compared to gold still. Even though the daily candle on Bitcoin is a rally, while the daily candle on gold is a down candle, you zoom out in any fashion. You see the chart of gold like this, you see the chart of Bitcoin like this. Which one do you buy more? You buy more Bitcoin. Very simple. Okay. That's the correlation of Bitcoin with the S&P with gold. Yeah, let's also look at Bitcoin's own technical analysis by itself. So on the last live stream on Thursday, I covered my exact setup at the moment, which is basically like this. We have the key levels to watch. The highest level is, I can show you. My God. This one right here. The first level to watch, 66,700, 800-ish. This is the higher low that we need to hold. If Bitcoin is to confirm its daily uptrend and keep going in the daily uptrend, okay, got a call there. If Bitcoin is to confirm its daily uptrend, it needs to hold above its previous higher low right here. 65,900. And so far, this is good. We have a bounce from the diagonal trend line, and you can say this bear flag did not break down, which is good. Trump came in right at the cusp of the breakdown. So now, this whole structure from early February until right now is technically a daily uptrend. You have high, you have low, higher low, higher high, higher low, higher high. We did not see a lower low yet. Okay? So two things we need to watch for a short-term uptrend to continue. Number one, still, we don't want Bitcoin to fall below 66,000, basically 66,000. We want this bounce to continue higher. If it does, okay, it doesn't even need to just shoot up. It can just hold in this range. If it holds here for a week, good. That's pretty much confirmed that 66,000 has held. So then the next logical place is for Bitcoin to revisit these 75K highs, the last higher high, to see if we can break it. If it breaks above it, well, that confirms the next swing of the high and the low. So because so far it looks pretty good, we can say that you can bet on a daily uptrend here if you want to bet on a continuation trade in the short term. However, just because you have a daily uptrend here doesn't mean it will go all the way into a bull run. Big difference. So the bull run resistance is up here. Even the lowest level that anyone will give you is this, the 200-day simple moving average, right now at 92,200. This daily uptrend can swing like few months and not get there because this is pretty far away. And this isn't even the full confirmation. Really, if you want the full confirmation that Bitcoin is back in the bull run, you need to break above the 200-day SMA, the 50-week SMA, which is right now at 97,000, 98,000, and this high here right in the middle, which is at 93,000. So there's a big range here between 92 to 98, this box. No matter how you look at it, whether you believe, oh, Bitcoin is going from here to 73 or to 75 or to 78 or to 80 or whatever, right? If you think this is more likely or if you think it's going to chop, whatever. I think we can all agree that this range up here is very difficult to be reached right away. And that's the big difference. We are in a daily uptrend, which means we will continue to have relief. The market is decent, just like it's been over the last 90 days from February 6th. Each time that they made a low on Bitcoin, it was a higher low. And each time we had a bounce, the bounce was higher. We are likely to continue having that decent market. Okay, people are fine. We're not seeing lower prices yet, but it doesn't mean it's a bull run. Okay, big difference. At any point, if this uptrend on the daily breaks, where we don't have the daily higher highs and higher lows anymore, and any of these swings breaks below the previous higher low, then you got to be prepared. Okay, all of a sudden the market is going to turn and all the sentiment is going to turn because people will realize, hey, we're still in the bear, and yes, we can have many more months of like okay swings, but the moment it turns around, people will then compare that with the bull market, threshold flag and say we're not at 95K yet. And then people will then talk about the targets we have been always watching, which is 58K, 59K, the 200-week simple moving average, which is down here. So ultimately, that's where I think we'll end up. It doesn't have to happen right away. This daily uptrend, it can sustain, but I think there's plenty of time, 7 months away until the typical bear market finishes, and the bull market threshold is still just so far away. So I don't want to jump the gun too quickly. I have seen some news outlets pick up a wrong number on the 200-week moving average by using the EMA, the exponential moving average right here, this setting. And they say that, hey, look, Bitcoin has bottomed because the 200-week EMA has been reached at 68,000. So they say that, and they say, oh, this is the bottom. Typically, Bitcoin bottoms at this level in the bear market. Well, that's not true. Because if you use the EMA setting, this is the exponential moving average. This moving average recovers more quickly based on the short-term price action, more so than the long-term price action. So this EMA has not been the bear market bottom at all. Here is the EMA in 2015. You see, Bitcoin broke below the 200-week EMA. And here is 2018, broke below it. The COVID drop was below there as well. And then here's 2022. It got way below it. So this is not reliable. You don't want to use the 200-week EMA as the bear market estimate. Okay, very, very clearly illustrated here. You want to use the SMA. Make sure you get it right. Okay? And the 200-week simple moving average, the SMA, is at 59K at the moment. All right, so that's the price action, everything around there I wanted to talk about. And finally, two small mentions about Clarity Act and XAI. So there is a brief window that's happening very soon to pass the Clarity Act. Apparently, we need to get it done over the next 2 months. Otherwise, this legislation will not move for years. I will dive deeper into this over this coming week, specifically going through the tokenization hearing on March 25th, because the Clarity Act is the biggest bill, the biggest positive bill for altcoins that we have on the horizon. And they're blocked by two things: tokenization and stablecoin yield. Both of these are being talked about this week. So look out for a full content live stream on this on Wednesday, I believe. And then some other news that I think is worth putting on the radar, starting from this week, is Elon Musk and X Money, and also what they're doing at XAI. So X Money is this new payment app network thing that's Elon Musk is releasing, and this is coming in April. He said X Money early public access will launch next month, which is April. And this is cool and important because they have hinted that they will have crypto payments and crypto trading. But when you search this up, you're going to see some like weird mentions. I don't see that one here. You'll see the beta video, and some people use this video and say, hey, this is showing Bitcoin transactions. No, it's not. It's showing fiat transaction. So nowhere in this app has any crypto at all, which is interesting. I think Bitcoin could get an integration, but some people are saying that Dogecoin will get an integration. This is one of the longest running, potential catalysts for Doge is from X. Way back, like I remember 4 years ago, they leaked the X backend with Dogecoin being used as payment. Well, this is X Money, and next month, finally, we will get this. We'll get to try this out. Whether they will have Bitcoin or Doge, let's see. So I think there could be an interest wave coming for Doge around this event. That's number one. Number two, well, they did say for sure that they will have crypto tracking from tickers and eventually crypto trading. It's not in this version, and they didn't say they will use anything for payment in crypto, but they did say that they will have trading. So if we can trade crypto on X, it will be big because all the English-speaking audience for crypto lives on X. This is the fact. And finally, among the Elon Musk sphere, they announced something very big called Terafab. They call it the next step towards a galactic civilization. So this is a chip factory. So here's what it is. The Terafab project is a joint venture between the two companies, Tesla and SpaceX. Now, this is the overarching brand for everything because, well, Elon Musk's current companies, Tesla is one half, and the other half, SpaceX and XAI, have already merged. So now all his main companies are coming together to form a chips company. Long story short, you need to understand this. So look out for more content in this direction as well, as I need to study this much deeply. This is going to be one of the biggest drivers for all markets, for all speculation. I like this new format. I don't know what you guys think. Let me know down in the comments. And follow me on X at VirtualBacon for quick alpha, for quick clips, summaries of all of these. I will try to post the Q&A sections that are more evergreen content, cut them up into clips and post them on X as well. And subscribe to the channel so you don't miss the future live streams. I'm trying to go live Monday to Friday right around the same time at 2 p.m. Eastern so that you guys can get the daily updates on the market so you don't panic when price drops and you don't FOMO too much if price pumps a lot. So we can all survive the bear market together. Okay, that's it. Thank you for watching, and I will see you on the next video and next live stream. Bye-bye.